I hope you can hear me. Yes, you can hear me. Yeah. Now I'm going to use a very simple charting and no indicators, nothing. And I'm going to explain a very simple method so that without indicator also you can learn, coordinate, and you can even make benefit out of it. Now, with this current setup, I will explain you. So, what are we looking now? The first thing is price made a first gap down, break up this is the stop, and it made this length. Okay. So, whenever there is one fractal is ignored, or usually we say that it is A, B, and C. Then it made a 1, 2, 3, sorry, 3, 4, and 5, slightly higher. So this basically exhibit that this pattern is completed with making a one more small high relatively and ended the pattern. Now what we are saying, market always behaves in this way. If you, I don't know if you are any trader, the market always makes impulse, then it makes correction, then it makes impulse. Traders can catch this kind of entries and they can make benefit out of it. These entries they can make benefit out of it. But what problem comes only when the traders get stuck here. Okay? Traders get stuck here. The problem arises over there. So the how do we do it without having any indicator, and how do we see whether it is impulse or whether it is correction or anything. So I'll just go through this very simple fundamental. Many people of you, many of you know the method of wave theory, and in fact you might be practicing it. It always starts with an impulse. It always starts with an impulse. Now note this very quietly. The impulse started from this point, from this peak. 1 second. Okay, so that was a peak, and what it made is it made A, B, and C. Then it made A, B, and C. Then from here it made an impulse A, B, C correction, break of that. The first target is this, the second target will be almost like this, and the third target will be this or this relatively. Usually we say this, okay, relatively with the previous pivotal points, trend pivotal points. This is a trend pivotal point. When we call this is as a trend pivotal point, it means it has a 1, 2, 3, 4, and 5. So this has got a 1, 2, 3 expanding 4, and this is the fifth wave. So it is a 5 wave momentum trend. So this we name it as a trend, pivotal of the trend. When the pivotal of the trend, previous one pivotal of the trend is broken, the market has entered into collectively the market has entered into a bear market, because we are speaking on the basis of the daily. Okay, now understand this. Let me collect this black. Yeah, when previous the entire move has been discounted here, this explains this is the previous pivot of the trend, this is the second pivot of the previous trend. Okay, so in this manner we justify what are we looking at, whether we are looking at something which is very inexplicable, or something that is not confirmed yet. For example, if the market has broken on this point, oh, I'm sorry, let me take the smaller one. For example, if the market has broken this and then if it has made an impulse correction over here, we would have bought here a break of this, and we would have traded here, or it might have entered into an above also, 63 also. One last statute pivotal, that is statute pivotal in the sense, one the last reference pivotal, that is called one impulse pivotal is this, the one reference pivotal is this, that is the immediate reference pivotal is this. If the market has broken this little slightly and turned here and then made a correction over here, like something like this, break of this, we would have entered, would have made a one more correction, would have entered, we would have made a one more correction, would have entered, it might have gone for the upward. So this is the reference pivotal of a last trend pivotal. So there are basic understanding has to be there before you go into an approach of technical trading. Basic understandings. And when you see so many gaps, people think that, oh, the gaps will be filled, oh, the gaps will be filled, oh, the gaps will be filled, oh, the gaps will be filled. No, it is not always the gaps will be filled. No, it's not always. Sometimes, yes. On the bear market, yes. On the bear market, the gaps will be filled. Okay. So the now question comes, how do we take this note, the explanation, into a realistic approach? You can go to, remove the complexity, we can go for the Heikin-Ashi, an average candle. Then to remove the complexity again, we can go for the lower trend. Now here, when I removed the complexity, what is the complexity basically I am talking about is, I am talking about a gaps. To cover up the gaps, I am using an Heikin-Ashi, where Heikin-Ashi is in a bipractical, it is an average candle. It's not a price candle, it is an average candle. That means it's not a closing price candle, it's an average closing price candle. Okay. So when we see this, okay, this is the last, it came below, then it made a 1, 2, 3, then it made a 1, 2, 3, then it made a 1, 2, 3, 4, 5, or something like this. Whenever it gives us a fractal break, we consider this is a fractal. Now why we consider that is a fractal? We will use a fractal indicator for that. Okay, this is a fractal indicator. So whenever the first fractal is broken, I'll use this one. Whenever the first fractal failed to broken, we consider this as a break of the trend and it will go to the reference point. I'm using a different color here, sorry for that. How many? Oh, 1 second please. I should have used a different one. Okay. So whenever there is a break of first fractal, this becomes a stop, this becomes the entry, and we are going for the reference fractal. When your price reaches the reference fractal or below reference fractal, we will wait for one more setup, that is A, B and C. Then break up the fractal again, internal fractal, we are going for one more down move. So this is how we justify our trades, but we don't take trades based on high Kinashi. We take trades based on a smaller time frame, and on the smaller time frame, that makes us very easy to okay. What happened? For instance, you had a gap down here, and this is a flag, right? If you sell short, this is your stop. It made a low here, then it made an A, B, and C. Break of this is your stop. Then it made a flag here, this is your stop. Then it started coming down. So it came and it made a flag here. So whenever the first flag that comes out after an impulse, see just now what I told you, impulse, you need a flag here. Then we will take an exit out of this. We made an exit, then it made an impulse, then it made a flag here. Break up this flag, we enter, and again we are going down. Again it made a flag here, it came, again it made a flag here, it came. Then what happened exactly? Exactly, you have an impulse, then you have a flag, you made an exit out of your trades. You get one more flag, break up the flag, you are entering, and you will take one pivot, two pivot, and the third pivot almost you will take a profit and you get out of it because this reaches the previous pivot. Now you are understanding? When it reaches the previous pivot, you are bound to take the profit, or you can wait for it. So it makes a one, two, three. Again, you have a flag pattern here. You have a flag pattern here. You have a flag here. Bounce. Again, it makes a 1, 2, 3. There is a flag pattern here. You sell at the flag and wait for it. So what are you witnessing is you are witnessing. See, it has made a it has made a biggest flag. I am not sure it will come. It will just break the low and it might turn also because this is a deep pullback. This is a deep pullback. None of them are having a deep pullback. This is a very deep pullback. Okay, this is deep pullback. So this is also in a deep pullback from this peak. So we are looking for somewhere 54,400. After that, we have to take a decision. So how do we sell it? We sell it when the first fractal is broken over here. When this breaks, we sell it. So can we go for the candlestick now? Yes, we can go for the candlestick now. On the candlestick, the first fractal is here. When it breaks, suppose if it gaps down, we sell it, our stop is here, our target is here. That's all. That's how we make every single objective based trading. Suppose if you want indicators to help you, that is one more concern. Indicators. One second. Indicators, I prefer. Best indicator is MACD, and if you are familiar with Ichimoku, you can use the Ichimoku. Ichimoku will never put you in a bad trade. That is what I have always found out. When it closes below this price will come to the lowest of this this cloud. Okay. So Ichimoku, at that time you can see the Ichimoku, the price will close below this cloud here. Chicago span, when comes below the cloud, it is good to go down. That means it's going down for 54,000 rupees. It's going down for that. Okay. So Ichimoku will basically help you. Yes, it will help you. The first of its kind is that when Ichimoku, when this rally it made, there was this is the future. It has already crossed here. So whenever there is a crossover above the cloud, that means you are along with the Shikov span, this is a Shikov span, and break up the first fractal, and this is the stop, and you have a rally. Okay, this is a safe method. Usually this is estimated as an 1:2, or sometimes it is more estimated more than 1:2. So this is your stop, 675 points, and you have 1:2. 2 is already overreached. It is 1:4.5. Okay, so it's overreached. So even on the sell side also, right now what I'm saying is that we need this. We need this short sell, and probably we will get it somewhere here. 1 second, and our stop will be somewhere around about 876 points, likely, and we are looking for 1:2. 1:2 is somewhere, you can see that now we are reaching somewhere here, same, somewhere here. Okay, so this is what we are looking right now. I just gave an example of the bank nifty, but it's not about the bank nifty alone. The education basically will help you to remove your complex ideologies and give you an objective based trading methods. So if you are interested, you can join the education course. It is coming from next month. This month we are not there. We are fully, I have just very few educational students. I am not much aggressive in this. I am not interested in aggressive also, right? Okay. There is one more indicator they have launched, UT bots. This bot is very good. But along with this bot, what I will do is I will remove the bar color, and along with this bot, see, the bot basically helps you. This is good. You can filter, of course. If you can use filtering using Williams fractal. You can use the fractal and you can filter it. See, the bot is very good, really. This was a sell setup, and there is no sell order has clicked. This is a buy setup, and the buy order has clicked here, basically. So this was a buy, and this was a stop, and you would have made 1:2 in case you would have gone for the option also. Okay, fine, that is option. This is around about 115 points, and you would have made around about 324 points in within couple of 15 minutes, 3 or 4 minutes, 3 or 4 candles. Within 1 hour you would have made it. So this is how basically it works. This bot, UT bot, is also very good. If you are interested, you can learn, and this also you can use it with some other indicators. For example, if you are happy with super trend, you can use the super trend here. You can use super trend. All right. If you are interested, please let me know. I can help you to build your own indicator. Okay. Thank you.